Hello viewers, welcome to my channel. I am Hasham. Last video, two problems have completed on computing the business income. And these type of problems will be asked for 12 marks in examination. So already two problems completed. Now in this video, 3 and 4, two problems I am going to explain you in detail. So my suggestion, before watching the video, keep a notebook, calculator, pen ready, so that whenever I say some important provisions, maintain running notes, because so many provisions are there in Income Tax Act, we cannot remember also. That's why we need to write it down. So always keep the running notes. Now before starting the third problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. Take the screenshot of the points of these two problems, then I'll explain every point in detail. Come on, see the problem number 3. Mr. Sainath commenced a business unit in a backward region declared by Government of India. The following is the summarized profit and loss account for the year ended 31st March 2024. Compute income from business and tax liability for the assessment year 24-25, our current assessment year. So here profit and loss account is given. So the net profit as per profit and loss account is 3,50,900. Our starting point is the profit as per profit and loss account. To this we add inadmissible expenses. Means those expenses which are debited to profit and loss account but which are not allowed by Income Tax Act, right? Some adjustments are also given. See carefully. During the financial year for setting up the business in backward area notified by the government, he received a subsidy in GST 25,000, power subsidy for using conventional energy 30,000. Income Tax Act says any subsidy or any subsidy in GST or subsidy for power, if these subsidies are received, it will be treated as business income. During the previous year, machinery for production purpose 2,80,000 and 3 lakh worth energy saving machinery are purchased on 5th July 23 and 10% of the cost is received as subsidy. That means from the cost of that machine, 10% we will deduct and the remaining cost we calculate depreciation. Due to slowdown in the business, part of the machinery is hired out for 3 months and hire charges received is credited to profit and loss account 36,000. Income Tax Act says during the year, due to some emergency, if machinery is given on hire, because there was a slowdown in the business. In the business slowdown, so machinery was idle and that machinery was given on hire and hire charges received. Income Tax Act says it is a business income, right? Now, debit side, we will start now. Computation of income from business of Mr. Sainath for the assessment year 24-25. That should be your heading. Now, net profit as per profit and loss account, it is given in the problem 3,50,900. Add inadmissible expenses. Means those expenses which are debited to profit and loss account but which is not allowed by Income Tax Act. Now debit side, payment to staff, salaries allowed, allowances allowed, bonus 30,000 but outstanding bonus 12,500, total 42,500. Now Income Tax Act says bonus will be allowed as deduction but outstanding bonus will not be allowed even if the business follows mercantile system of accounting. So normally mercantile system of accounting means accrual system of accounting where all current year expenditure will be allowed whether paid or outstanding, but exception is given. One exception Income Tax Act says bonus, if it is paid, it will be allowed. If bonus is outstanding, it will not be allowed. So here nothing is given that bonus has been paid before filing the return. If bonus is paid even after closing the accounts but before filing the income tax return, it will be allowed. But no mention is given. So we assume outstanding bonus is not paid. So it will be disallowed. So outstanding bonus 12,500 disallowed. In working note, after completing the solution, below this working note, below this solution, you should write working note. In working note, you should say bonus will be allowed only on payment basis. If it is outstanding, bonus is not allowed. Then perquisites, it will be allowed. Then expenses on own building, business. That means own building is used for business purpose. So any expenditure on the building will be allowed as reduction. Municipal taxes on the building allowed because building is used for the business. General repairs allowed. Capital repairs, very important point in working note you should write down. Capital repairs on own building will not be allowed as reduction. Sorry, will not be allowed. If it is a rented building, and capital repairs are there, it will be allowed. But for own building, not allowed. So here own building is there. So capital repairs 32,000 disallowed. Add back. In working note you should write down. Capital repair is disallowed because the building is owned by the SSC. Capital expenditure, whether own building or rented building, it will be completely disallowed. And remember one point. This capital repairs and capital expenditure, Income Tax Act says depreciation is allowed at the rate of 10% because it is a non-residential building. So 10% depreciation will be later on allowed on capital repair 32,000 and capital expenditure 96,000. 10% debt. Then other expenses allowed, taxes, income tax advance. Profit and loss account is debited by income tax. Income Tax Act says income tax is not a business expenditure. It is a personal payment of the owner. So income tax is specifically disallowed. So here income tax 6,500. In working note you should write down income tax is not a business expenditure, so disallowed. Security transaction tax. If security are part of the business activity, if interest on security is a business income, then security transaction tax will be allowed as reduction. But here, is there any income or interest on security? No. Credit side, you can see there is no interest on security. When there is no interest on security, so this security transaction tax is not a business expenditure. It is disallowed. Add back. Suppose if on credit side it is given interest on securities, then we can say interest on security is a business income and security transaction tax will be allowed. But here nothing is given. So security transaction tax disallowed. Next comes profession tax. So Income Tax Act says profession tax is allowed as reduction. GST, that will also be allowed. Depreciation. Income Tax Act says depreciation on land is not at all allowed because land is a non-depreciable asset. Land and building is there, depreciation. Or only building is there, depreciation is allowed. But only on land, never. No depreciation will be allowed on land. So depreciation on land is allowed. Similarly, depreciation on machinery allowed. Depreciation on building allowed. Depreciation on investment not allowed. Income Tax Act says depreciation is allowed only on building, machinery and furniture. And depreciation on land or this investment not allowed, disallowed, right? Then furniture allowed, net profit. So whatever debited expenditure which are debited to profit and loss account but which are not allowed by Income Tax Act, we have to add back. Take the total 179,400, add up 350,500 plus 179,400, 530,300. Now less. Incomes taxable separately. That means any income which is credited to profit and loss account. But Income Tax Act says it is not a business income. So we deduct. Now credit side you see. Gross profit, then dividend on shares. So dividend and shares will be taxable under income from other sources. It is not a business income. So deduct dividend on shares. Similarly, income tax refund. When income tax paid is not allowed as deduction, so income tax refund is not an income. Our amount which is paid to the government has returned back refund. So it is not treated as an income, it is not taxable. So we deduct income tax refund. In working note, you should write down these points. Income tax refund is not an income, not taxable, but it is already credited to profit and loss account. So we have deducted. Next is profit on sale of machinery. Profit on sale of machinery always will be treated as short-term capital gain. Remember this point and write down in working note also. Any machinery is sold and any profit is arised irrespective of the period of holding, long-term or short-term, doesn't matter. Always treat it as short-term capital gain. It is not a business income. So deduct profit on sale of machinery, 84,000. So these three items. Apart from the hire of machinery, one machinery was given on hire because there is a slowdown in the business. The machinery is idle. So this machinery was given on hire. Hire charges received. It is a business income. It is a business income already credited to profit and loss account. Nothing to be done. Right? So take the total of this 126,200. Now deduct minus. So 530,300 minus 126,200, 404,100. Now less unrecorded incomes. Some incomes are there but which are not credited to profit and loss account. Now we add. What are the other incomes? Subsidy in GST and power subsidy. These two subsidies are business incomes but not credited to profit and loss account. Now we add unrecorded incomes. Subsidy on GST 25,000, power subsidy 30,000. Total 55,000. Add up these two, 459,100. Now deductions allowed as per IT rules. Now these are not given in the problem. You have to remember the depreciation which is allowed on capital repairs. Capital repair was disallowed, not allowed. How much? 32,000. 10% will be the depreciation on capital repairs. So 10% on 32,000, 3,200. And capital expenditure on the building. Capital expenditure on the building. Again, depreciation is allowed. 10% on 96,000, 9,600. Similarly, depreciation. New machinery was purchased, 2,80,000. But government has subsidized 10%. So 2,80,000 minus 28,000. Our cost of the machinery is 2,52,000. And depreciation rate on machinery is 15%. Remember, these percentages will not be given in the problem. You have to remember the building 10% and for machinery 15%. So 15% of 2,52,000, 37,800. Now depreciation on power energy saving machinery. Separate rate of depreciation is there for this machinery, power saving machinery. Income Tax Act has given that 40% is the rate of debt on power saving machinery. So power saving machinery is 3 lakh. 40% of 3 lakh, 1,20,000. Take the total of these four amounts, 1,76,600. These are the deductions allowed as per IT rules. Deduct minus 176, 459,100 minus 176,600, 288,500. That is the business income. Now we have to find out the tax liability. So before calculating tax liability, we need the total income. The incomes are business income 288,500. Apart from that, short-term capital gain, that is the profit on sale of machinery here. Profit on sale of machinery 84,000. So it is a short-term capital gain. So short-term capital gain, profit on sale of machinery. Dividend on shares. This is taxable under income from other sources. Income from other sources, dividend on shares. Total income is 407,500. Right? Now tax liability. The basic exemption limit is 2,50,000. Assuming that the assessee is a non-senior citizen. Assuming, because it is not given in the problem. that the SSC is a non-senior or senior or super senior, nothing is given. So we assume non-senior. So 2,50,000 up to 2,50,000, income 2,50,000, tax is nil. Rate of tax is nil. The second slab goes from 2,50,001 to 5 lakh. But our income is not going up to 5 lakh. Our income is only 4,07,500. So we'll take the balance. So 4,07,500 minus 2,50,000, the balance is 157,500. On this, the rate of tax is 5%. So 5% of 157,500, 7,875. So tax on total income is 7,875. Health and education says 4%, 315, 8,190. Now remember, if the SSC's income is below 5 lakh, then tax rebate will be given under section 87A. In working note, you should write down. Since the total income is below 5 lakh, so tax rebate under section 87A will be allowed to the least of the following two amounts. Actual income tax or 12,500, whichever is least. So actual income tax is 8,190 and 12,500 is the limit. So whichever is less, 8,190 is less. So deduct tax rebate 8,190, tax liability is nil. No tax liability. But already he has paid the advance tax, income tax he has paid 6,500. Already he has paid the advance tax. So here after writing this tax liability nil, you should write down refund of advance tax is 6,500. That's it. This is the end of problem number 3. Now see the problem number 4. Profit and loss account of Mr. Banwar Lal for the year ended 31st March 24 is as follows. Compute income from business and tax liability for the assessment year 24-25. So net profit is 185,660. So I have taken net profit as per profit and loss account 185,660. Right. Now adjustment first you see. Present rate of gross profit is 15% and earlier it was 20%. We are not concerned with earlier gross profit rate. Current year gross profit rate is 15%. The detail of interest debited are 6,000 interest paid on working capital, 2,000 for purchasing an asset and 3,000 on personal loan. So if you add up 6,000 plus 2,000 plus 3,000, it is 11,000. So total debit side you can see interest on loan 11,000. The breakup of this 11,000 he has given some interest is paid on loan taken for working capital, some interest is paid on loan taken for purchasing the asset and some interest is paid on personal loan. Income tax act says if the loan is taken for working capital and interest is paid, it is allowed as deduction. Because for working capital purpose we have taken the loan, so interest paid will be allowed. Whereas interest on loan taken for purchasing the asset is not allowed as deduction. Similarly, interest paid on personal loan is not allowed as deduction. All these points you have to write in working notes. Rent payable 750 per month and prepaid insurance 1,200. Actually, monthly rent is 750. So 750 into 12, you will get 9,000. So 1 year rent is 9,000. But how much rent is debited to profit and loss account? 7,000 only. So out of 9,000, only 7,000 rent is debited to profit and loss account. Still rent outstanding is 2,000. That outstanding rent 2,000 will be allowed as deduction. It is not debited to profit and loss account. Now we give the deduction according to Income Tax Act. But prepaid insurance is not allowed. Prepaid means any expenditure which is paid for the future. For the next year, we have paid the expenditure during the current year. It is not allowed. The prepaid insurance 1,200 is disallowed. We add back. Then SSC is unwilling to claim 4,800 telephone charges, 5,100 for depreciation on business assets. It's unusual. Actually, every SSC wants the deduction. But here the SSC does not want to claim the deduction, he want to pay more tax. So Income Tax Act says we don't have any objection if you don't want to claim deduction. But depreciation deduction is a mandatory, whether you like it or not. You have to give the deduction. So here, as per IT rules, depreciation should be allowed as deduction. But other deduction, if the assessee is not claiming, no deduction. Then a sale of 50,000 is not recorded in the books. Unrecorded sale. What is the gross profit rate on of the business? 15%. When the business sells the goods, 15% is the gross profit. So calculate 50,000 into 15%. You will get 7,500. This 7,500 is a profit on unrecorded sale. It is not taken in profit and loss account. Now we add profit on unrecorded sale. For achieving the sales target, one of the distributor presented a TV set worth rupees 17,000. Income Tax Act says any TV or any present is given by the supplier or distributor, that should be treated as a business income. But it is not credited to profit and loss account. Now we add this income. 17,000 is the gift presentation received. It is business income. Add. Salary of employees is paid through bank except for watchmen whose monthly salary is 2,000 paid in cash. Actually, Income Tax Act says all the payments should be through check or draft. No payment should be made in cash over 10,000 rupees in one amount. Here, watchman is paid 2,000 rupees cash every month. So every month means 12 months. 2,000 into 12, it comes to 24,000. But 24,000 is not paid in one lump sum amount. It is paid in 12 installment. Every time only 2,000. And 2,000 is below 10,000. It is allowed as deduction. So nothing should be done regarding the payment in cash. Monthly 2,000. Now we'll come to debit side and see which are the inadmissible expenses. The expenses which are disallowed by Income Tax Act. Salaries 75,000, including proprietor's salary 6,000. Proprietor's salary means owner's salary. Income Tax Act says salary paid to employees will be allowed, but salary paid to proprietor is only a notional salary, not allowed as deduction. So here proprietor's salary 6,000 disallowed. General insurance premium 4,200, but just now in the adjustment it is given 1,200 prepaid, advance paid, disallowed. So prepaid insurance, you can see here, prepaid insurance 1,200. Then bad debts are allowed, but provision for doubtful debts disallowed, specifically disallowed by Income Tax Act. So provision for doubtful debts 5,000. Next comes rent allowed. Then discount allowed. Interest on loan 11,000. Out of 11,000, only interest on loan taken for working capital is allowed. Regarding interest on purchasing the asset, 2,000 will be disallowed, and for personal loan interest it is disallowed. So interest on purchasing an asset is disallowed. Interest on purchasing an asset will also be disallowed. Right? Interest on personal loan 3,000, interest on purchasing an asset is disallowed. Now next, annual license fee is allowed. GST is allowed. Income tax is disallowed. Income tax is disallowed 12,000. Interest on capital disallowed. Interest on capital 7,500 disallowed. So these are the expenses which are debited to profit and loss account. Disallowed. Add back. Take the total 36,700. Add up these two amounts 2,22,360. Now deduct those incomes which are credited to profit and loss account but which are not business incomes. So credit side gross profit 15% is so and so. Commission is a business income. Nothing should be done. Already it is credited. Profit on sale of long-term investments. Profit on sale of long-term investment is taxable under long-term capital gain. It is not a business income. It is separately taxable under long-term capital gain. So we deduct Less incomes taxable separately. Profit on sale of long-term investment 22,000. Deduct 2,360,000. Then bad debts recovered 15,000 allowed earlier as deduction. In the previous year, bad debts was allowed as deduction by the Income Tax Act. Now it is recovered. Income Tax Act says it is a business income. So in working note you write down, bad debts recovered is a business income because it was allowed as deduction earlier. It was not allowed as deduction earlier, then it will not be a business income. Right? Here it was allowed as deduction, so now it is a business income, nothing should be done. So credit side over. Now deductions allowed as per IT rules. Income Tax Act says rent payable, total 750 per month into 12, 9,000. But on profit and loss account debit side only 7,000 was debited. So still 2,000 is allowed. So rent payable 2,000 is allowed. Depreciation on assets 5,000. In adjustment it is given the assessor does not want to claim depreciation, but Income Tax Act says it's a mandatory. You have to deduct 5,000, 7,000, 193,260. 193,260. Now business incomes which are not credited to profit and loss account. In adjustment it is given. Some business incomes are there, profit on unrecorded sale. 50,000 rupees sales are there which are not recorded. Now rate of gross profit current year is 15%. Previous year we don't require. Current year 15% of 50,000, 7,500. And when television was presented by the distributor, and this presentation of TV by the distributor 17,000 is a business income but not credited to profit and loss account. Now we have to add back. So 7,500 plus 17,000, you get 217,760. That is the business income. Now we have to calculate the tax liability. Business income 217,760. Long-term capital gain. This is the profit on sale of long-term investment 22,000. The total income is 239,760. Total income. But basic exemption limit is 2,50,000. 2,50,000. But other income, business income is only 217,760. The business income is only 217,660. So deficiency 2,50,000 minus 217,760, 32,250. This 32,250 deficiency can be adjusted from long-term capital gain. Our long-term capital gain is only 22,000, but we have the power to deduct up to 32,240. We don't have income up to 32,240. We have the income only 22,000. The long-term capital gain is 22,000, deficiency 22,000. The taxable income is nil. When taxable income is nil, the tax liability is also nil. This is the end of problem number 4. So each and every point I have explained in third and fourth problem. Hope you understood my lecture. If you are satisfied, give a like to the video and subscribe to my channel. Please do subscribe. The subscribers are not increasing. So many students are watching the video but not subscribing. Please come forward and subscribe my channel. Inshallah, we'll continue the next problem in the next video.